So in this video, I'm going to be reviewing two of my best trading days from December. And these actually happen to be back-to-back trading days because as you can see, this was on the 17th and this was on the 20th. So this was Friday, this was Monday. And in these 2 days, I made a total profit of almost 5,000, which is pretty good for me. It's not the highest I've ever made, but it's close. And as you can see, I only traded two stocks, Godrej and Reliance. These are both stocks identified to be in downtrend. So I did not take any buy side trades at all. All of these buys that you see, these are just squaring off all my short positions. So I only shorted these stocks. And as you can see on Friday, I placed only three trades, three consecutively green trades, which was a nice clean profit of 2.5k. But on Monday, I was actually up 3,800 at one point. But as you can see, I made a losing trade of 1450 at the end, which put me down to a profit of 2385. Still a good day, but had this been my profit of 3800 instead of 2300, I would have made a total of 6200 approximately, which would be a record for me. But anyway, I'll first walk you through all my trades. So we are on the chart of Reliance. We're looking at the 5-minute chart, December 17th. And as you can see, right after market open at 24.08, there was a very aggressive sell-off. So the second there was a slight pullback and then a breakthrough of the support level. Right below the support level, I went short at 23.72 over here, and I bought back at 23.65. That was a very premature buy. I should have probably bought back around 23.58 to 23.59, going by the ATR of. So when I went short, the ATR was 6.71. So I should have kept a target of at least 10, but I kept a target of 8. So my spread was a little too tight. And as you can see, I missed out on a massive breakthrough here. As you see, there was a pullback and then broke through the support level and fell by more than 30 rupees, which was a massive crash that I could have capitalized on. And after that, there was just some pullbacks and some consolidation after 11 p.m. And if you look at what happened on Monday, the following market open, there was a gap down. The market tried to fill the gap but didn't do so successfully. And right after this low was broken on this first candle, right below that at 22.88, I went short and buying back at 22.80. That was a decent trade. And then as you can see, there's one bounce here, another bounce here, and then on the third retest, it broke the support level. So it sort of shorted somewhere around here. And as you can see, after a bit of consolidation, there was again a massive sell-off. And if you notice, there's a lot of similarity between what happened on Friday and what happened on Monday. If you look at it, there's a lot of aggressive selling off in the start, then some consolidation, and then some recompensation. So for Godrej, as you can see, guys, on the 17th of December, right after market open, there was a very, very aggressive sell-off. In fact, if we take it from the high of this point, all the way down to the rebound, we see a sell-off of almost 5%, which is absolutely crazy. And all of that happened before 10 a.m., mind you. And so, although normally I don't like taking trades before I look at 45 minutes of price action, I decided to get into the market at 9:30 when I saw a very aggressive sell-off. And as you can see, this level of support was broken, and right below the support level at 1961 is where I went short, and I bought back at 1952. Now this was a premature liquidation because if you look at the ATR at this region, it's around 9.35. So I normally take ATR plus 2 or plus 3. So I should have sold around here at this level. Obviously, as you can see, it sold off way more than I anticipated. But I would say this was a decent trade, but I need to work on my exits. My spreads are still too tight with respect to the given ATR. And then as you can see, it rebounded at a level of 1915, pushed up. And as you can see, when it went closer to the resistance level, that's when I shorted it because that was my prediction. It was in a downtrend. So I shorted at 1929, bought back at 1918 approximately. So I made a little more than 1,000 there. It was a pretty decent trade, I'd say. It was more like a scalp almost. And as you can see, it broke the support level. So at this point, the trend was in sort of indeterminate form. I didn't know what was happening. But if you notice something, this support line that I've drawn here was tested once here, twice, thrice, 4 times, and only on the 5th time over here was the support actually broken. So as you see, this was a very strong level of support, and so once once the support level was broken, I mean, from there it was just downwards. As you can see, it sold off by what, 30 rupees. And this is a trade I definitely missed out on. I should have definitely shorted somewhere, or at least waited for a close below and then shorted on this candle. And as you can see, towards the end at around 320, this is usually when people, because a lot of people don't trade with stop losses, right? So this is, at this time, a lot of stop losses get hit and a lot of buy orders take place, and so naturally a stock in a downtrend jumps, and that is what happened with Godrej. So on Monday, right after market open, Godrej went down and then pushed up quite a bit. In fact, if I pull out the measurement tool here, we had an approximate move of 4.7% in just 15-20 minutes, which is quite crazy. You don't normally see that kind of volatility in these highly liquid stocks. But as you see, after this major push up, there was a pullback, and when it pulled back, I drew a level of resistance here, and when this level of resistance R1 was broken, I shorted right below the level of resistance and bought back at 18.17, which normally would have been a good trade. But if you look at the ATR over here, it was approximately 19, and so I should have obviously taken a much larger target of around 20 rupees instead of 10 rupees per share. And then there was another pullback here, so I shorted it again near previous resistance and bought back near previous support. That was a perfectly placed trade. And if you look at this white line here, it was tested once, twice over here, right? Third time over here, and so the fourth time when it was broken over here, that's when I went short. And I went short a little too away from the support line. I should have shorted it around 17.99 instead of 17.96, and of course I bought back far too early at 17.88. So that seems to be my recurring theme. I'm not determining my spreads correctly with respect to the ATR. Now here is my biggest misfortune that took place. I shorted at 17.97, right as the stock was approaching previous levels of resistance, but it broke the level of resistance, which was fine. I placed my stop loss here. That was a mistake I made. I placed my stop loss at 18.13 when I should have placed my stop loss at the top of this red candle as the previous swing high of 18.24. And as you can see, right after stopping me out, the stock continued to go down, sell off. I would have made a lot of profit here. I would have been up 4,000 on the day. But yeah, that happens. It's part of the game. And as you can see, after that, there's just a bit of consolidation and then pushing up, just like the stock moved almost identically to the way it moved in Friday. But yeah, that was my 2 best days from December, and hopefully we'll do better in January.